Hi investors, welcome to watch Stock Market Watch June 10. This is Michelle. In this video, I will give you a general idea about the stock market of US and Canada, what's going on. And also, I will analyze that based on the fundamental technical analysis and also the technical analysis. Okay, first, let's see the US market today. For the U.S. market and the week on week note Friday, as OU dropped down, and the yields on the global government bonds skidded amid booming political and economic headwinds that are pushing nervous investors away from the risky assets. So for the Dow Jones Industrial average close off is lower for the day, but still lost 120 points, or 0.67 percentage, and close at 17865.34. And the S&P 500 index reached with a new record high all week, but has been unable to top its May 2015 peak of 2,130, lost 0.92 percentage and closed at 20696.07. So heading into Friday's trading session, um, the the benchmark large company U.S. stock index was 15 points or less than 1 percentage, so from a fresh record. And for the Nasdaq also, and they done 1.29 percentage and close at 4894.55. Okay, so let's see the chart of the Dow Jones first. And from the Dow Jones, I draw the white line at the top. This is the position of 18,000 points. So that is quite like the key, very important position for the Dow Jones right now. You see from that you can see a lot of times since last year November it can touch but never break through the 80,000 position, and from the May 20th they have just only 2 days breakthrough, but for the third days on the 21st April they drop down again and get the resistance from this position. And for this week also the same, they have a 3-day touch and have a little break off but never stand up above the 80,000 the points position. So that means the resistance still work for the Dow Jones right now. As well as it's a break, and also it must be the a break activity. So that means must break for 3 days and more than 3 percentage. We can see it's really the break off. Otherwise, they only the fake situation like this time. Just touch 2 times and drop down today. And also for the S&P 500 has the great work now to climb up. So that position will be the 2,100. And I will draw one here. This is the 2,100. Okay, and for this one, it's also the same situation with the Dow Jones. So that get resistant, and even didn't touch. And for this April, it's also get resistant, didn't go through. And for this week, have also already have a 3 days, 4 days breakthrough. But for today, unfortunately, just dropped down. So the support is not working. The and the position become the resistance from the support after the breakthrough. And from the harmony unit indicator divergent expert, you also can see it very clearly. The red column means the money in, so that means the buyer is more than the seller. And for the green column, it means money out. That means the seller is more than the buyers. So from today, this appear the what color? Yes, it's the green one. That's the thing we don't want to see. But as I tell you at the beginning, the investor just get the headwinds and run away from the risky assets. Okay. And right now, let's back to the Canada market. And for the Canada also, because for the oil dropped down back from the $50, the big resistance. And today have 202.58 points drop down, or 1.42 percentage, and close at 140. 37.54. And if we go to the Canada market, and from the Canada market, we can draw the, as I told you yesterday, it's still in the middle time uptrend channel, but we just get a resistance and drop down. And for today, it's almost touch the bottom line of the trend channel. So we'll get the support for that. If it didn't get if the support of the trend channel could not work, so the target drop down, the price will the former lower, so it's that position. So near that position is 13715 is around that position. And also from the Division expert, we also could see the money is flew out. Okay. So if we want to know the future of the US or Canada stock market, we must know the oils. The oils after the touch for the $50 a barrel, just dropped down for 2 days already, and right now is below the 50s. So after the 50 and get resistant, and they going below. And if you follow my video, you can see that chart I share with you on the 8th. And on the 8th, I said this is a head shoulder pattern, and from the pattern you can see the target price will be the 60. But if the next target is 50, must have the breakthrough the shoulder here, then that will be have the next target. Otherwise, the target will be the 40. So the 45, the former lower. So right now it's getting resistance. So the breakthrough is not breakthrough activity. So they keep for 3 days, but didn't keep the 3 percentage. So these two requirements must qualify at the same time. Otherwise, they must get the resistance, the drop down, or go in the sideways around the 50s. So if the oil want to back to the 60, the oil price must break through the former shoulder here that will be around 50 or 51 for 3 days and more than 3%. That's the two requirement must qualify at the same time. Okay, otherwise we'll give the resistance at that part and drop down to the former lower. Okay, and for the oil, the fundamental part, I will show you a video, and the I really like this, the Matlani, and I put that in my subscription, and I see it every day, so I think it makes sense.
Why am I so hung up on the price of oil being stymied at around $50 a barrel and refusing to go much higher than that level? I'll tell you why. It's because of contraindicators. Contraindicators like Harold Hamm, the chairman and CEO of Continental Resources. Hamm was on CNBC yesterday morning talking about the price of oil being at a turning point, he said, ready to launch from 50 bucks all the way up to the 69 to $72 area. Oh boy, I said to myself, that's why oil's going nowhere. You see, in the years since
Okay, show you again.
Why am I so hung up on the price of oil being stymied at around $50 a barrel and refusing to go much higher than that level? I'll tell you why. It's because of contraindicators. Contraindicators like Harold Hamm, the chairman and CEO of Continental Resources. Hamm was on CNBC yesterday morning talking about the price of oil being at a turning point, he said, ready to launch from 50 bucks all the way up to the 69 to $72 area. Oh boy, I said to myself, that's why oil's going nowhere. You see, in the years since I've gotten to know this delightful, giving man, a real pioneer in the business, I've come to know him as the ultimate wrong way for prognosticating oil. That's right. When crude was in the mid-80s, going down to $25 a couple of years back, Ham came on Mad Money and predicted that oil was quickly going to rebound up to $100. I always remembered because I had Sharif Suki, the now deposed former CEO of Cheniere Energy, come on the show that exact same day, and he said the total opposite, telling us oil belongs substantially lower, perhaps $60, maybe even less. But we sure know who made the right call, don't we? Suki talked about how traditional oil people don't have market departments to tell them whether there's any demand. They don't say, hey, you know what, we really can't sell that oil right now. Instead, they just keep pumping and pumping. And that's exactly what Ham did, and it was totally wrong. Hence why his company, Continental, was among the biggest losers during the downturn, trashing hundreds of millions of dollars. He's the last guy I would follow on this issue. Not only that, but Ham indicated on Squawk yesterday that he was ready to start pumping again. With oil at $50, quote, we will complete wells that have not been completed, end quote. Meaning that this price is where Continental, he thinks, can exploit an amazing opportunity. Although he did say that he isn't going to start using new rigs. Alright, I find that cold comfort. See, Ham's doing what a lot of other oil execs in this country are doing, starting production again, which in itself is a self-fulfilling and negative prophecy. Because all the new supply they bring online will just push prices lower again. You can't get oil to rally from here if most oil people share Ham's bullish mindset. And I've got to tell you, from talking to many of them, they do. More important, it shows that these guys really never learn. I mean, honestly, I may ask you, what the heck is Ham doing still predicting the price of oil, given that he's been so unbelievably off base for so long? This guy's been so optimistic. And frankly, I gotta tell you, you gotta bet against him. Given that oil's all that seems to matter to the stock market, though, and if oil's down, like today, we can rest assured that stocks are going down, like today. Ham's comments are tremendously important because it contraindicated. He's turning the spigot on again, and that will only encourage the Saudis to pump more oil in order to send oil back to where Ham can't pump without losing a lot of money. In other words, crude is going back to the 40s, not the 60s or 70s, if you ask me. if that's the way the hand's been played. So let's be careful out there, because as long as this linkage holds, lower oil means lower stock prices. Harold, here's my advice. If you really are going to turn the spigot on, as you said in Squawk, start selling some Continental Resources stock. Trust me, you won't regret it. At 40 bucks up from 13 back in January, Ham and his fellow shareholders have caught an amazing move in Continental, regardless of where his stock traded during the heyday of higher oil prices. In other words, Harold, time to ring the register. Ka-ching, ka-ching. Different.
Yeah, so that's it.
I think it's quite funny and make a lot of things make sense. So if you like, you can follow his Facebook also. And of course, if you like my video, you can follow my get the video for free by following my Facebook. My Facebook is Initial Stock Market Watch, Michelle Wang. And if you have any suggestion or you want me analyze your stock, you can send me your stock codes to my email address. So my email address is michellehomilychartcanada@gmail.com. So that is today, and thank you for watching it. And also, tomorrow is next weekend, and hope you have a very good time during the weekend. Okay, see you on Monday. Bye.